You are staring at a screen that looks like a crime scene. For the last 48 hours, you have watched the wealth you worked for, the savings you protected, and the thesis you believed in get dismantled candle by red candle. It is Tuesday, February 3rd, 2026, and the feeling in the pit of your stomach is not just fear, it is a heavy, suffocating sense of betrayal. The market was supposed to be the arbiter of truth. The market was supposed to reflect reality. And yet, as the world burns with geopolitical tension, as the debts mount to astronomical levels, and as the supply of physical metal dwindles, the price on your screen tells you that gold and silver are worthless. You are asking yourself the question that haunts every investor in the dark hours of the night. You are asking, was I wrong? You are asking, is it over? You are holding your finger over the sell button, desperate to stop the pain, desperate to make the bleeding stop. But before you press that button, before you capitulate to the chaos, you need to understand what is actually happening. You need to understand that this violence, this speed, this brutality is not a signal to leave. It is a signal to pay attention. We are witnessing a calculated, mechanical, and psychological operation designed to separate you from your position. This is the smash. It is a phenomenon as old as markets themselves, but in the age of algorithmic trading and high-frequency leverage, it has become a weapon of mass financial destruction. And while the West is panicking, while Wall Street is flushing the tourists out of the casino, something profound is happening on the other side of the world. A giant is moving. China is issuing a challenge to the dollar that changes the fundamental calculus of why we hold precious metals. To survive this week and to thrive in the years to come, we have to dissect the anatomy of this crash. We have to strip away the emotion and look at the mechanics. Because when you understand the mechanics, the fear evaporates and clarity takes its place. What we saw on Monday and what continued into this Tuesday morning was not organic selling. Organic selling is slow. It is an investor looking at a valuation, deciding it is too high, and gradually exiting a position. That is not what happened. What happened was a liquidation cascade. It was a structural failure of the leveraged positions that had built up over the last month. Speed is information. This is a mantra you must burn into your mind. When a market drops 10% in a straight line, when silver gets taken out to the woodshed and beaten down by dollars in minutes, the market is giving you information. It is telling you that this move is not about the metal, it is about the margin, it is about the leverage. The market had become top-heavy. Too many people had piled into the trade using borrowed money. They were renting the price action, not owning the asset, and the market, in its ruthless efficiency, decided to evict them. When the price dipped below key technical levels, it triggered a chain reaction. Margin calls went out. Computers, not humans, executed sell orders to cover debts. These sell orders pushed the price down further, triggering the next layer of stops. It is a domino effect, a feedback loop of destruction, and the result is what we call a smash. It is ugly, it is painful, but it is also necessary. It purges the system, it cleans out the weak hands, it resets the board. But here is the trap, the psychological trap that the system sets for you. When you see this violence, your brain interprets it as a change in fundamentals. You think, the price is crashing, therefore the reason I bought must be wrong. This is a logical fallacy. The price is crashing because a hedge fund in Connecticut got margin called, not because the US government paid off its debt. The price is crashing because a computer algorithm hit a sell limit, not because the solar panel factories stopped needing silver. The fundamentals that drove you to buy gold and silver, the debt, the debasement, the scarcity, are exactly the same today as they were last week. In fact, they are stronger. While the Western paper market is throwing a tantrum, Look east. Look at what is happening in silence while the noise deafens us here. China has just issued a signal that is perhaps more important than any price chart. They have publicly reaffirmed in no uncertain terms their intention to challenge the hegemony of the US dollar. This is not a conspiracy theory. This is stated policy. China is actively building the rails for a financial system that does not rely on the greenback. They are settling trade in yuan. They are building their own cross-border payment systems. And most importantly, they are accumulating the ultimate neutral reserve asset, gold. Why does this matter in the middle of a silver crash? Because it provides the floor. It provides the long-term bid that underpins the entire market. The world is fracturing. We are moving from a unipolar world where the US dollar was the only game in town to a multipolar world where nations need to protect themselves from weaponized finance. In a multipolar world, trust is low. When trust is low, you don't hold your enemy's currency. You hold neutral assets. You hold assets that have no counterparty risk. You hold gold. You hold silver. China understands this. Russia understands this. The Global South understands this. They are watching the price smash in the West, and they are not panicking. They are celebrating. They see this as a discount. They see this as an opportunity to exchange their trade surplus dollars for hard assets at a cheaper price. We are witnessing a massive transfer of wealth from the impatient West to the patient East, from the paper hands to the diamond hands, from the speculators to the strategists. Do not be on the wrong side of this transfer. Do not be the person who sells their insurance policy because the premium went down for a month. Think about the concept of insurance. You buy gold and silver to insure your wealth against the collapse of the purchasing power of the fiat currency. You buy it to insure against geopolitical chaos. You buy it to insure against a banking crisis. If the price of your insurance drops, do you cancel the policy? Do you say, oh, my house didn't burn down today, so I guess I don't need fire insurance? Of course not. You keep the policy. And if the policy gets cheaper, you might even buy more coverage. The smash we are seeing is an attempt to shake your conviction. It is a test. The market is asking you, do you really believe in this? Are you here for a quick trade, or are you here for the revolution? If you are here for a trade, you are probably already gone. You are washed out with the leverage. But if you are here for the long haul, if you are here because you understand the mathematics of the debt spiral, then this volatility is just noise. It is sound and fury, signifying nothing but the mechanics of a broken market. Let's talk about the trap of emotion. The hardest thing to do in investing is to sit on your hands when your brain is screaming at you to act. We are wired for survival. When we see a threat, and a crashing portfolio is perceived by the brain as a survival threat, we want to run. We want to do something to stop the pain. The easiest way to stop the pain is to sell, to go to cash, to walk away. But in investing, the comfortable action is almost always the wrong action. Selling into a panic is the cardinal sin of wealth preservation. It crystallizes a temporary loss into a permanent one. It removes you from the game right before the rebound. Instead of asking, should I get out? Ask yourself a different question. Ask, who wins if I sell? Who is on the other side of that trade? When you hit the sell button at the bottom of a crash, who is buying your ounces? It is the bullion banks. It is the high-frequency trading firms. It is the smart money institutions that have been waiting for this flush to deploy their capital. They are the ones who win. They need your liquidity. They need your panic to fill their order books. Do not give them the satisfaction. Do not be the liquidity for the very entities that are rigging the game against you. The narrative of dollar strength is the weapon they are using right now. The smash in metals is largely correlated with a spike in the dollar index, DXY. The media is shouting that the US economy is resilient, that rates will stay high, that the dollar is king. But look beneath the surface. Is a currency strong when the government issuing it is adding $1 trillion of debt every 100 days? Is a currency strong when the interest payments on the debt consume the entire tax revenue? No. The strength of the dollar is an illusion. It is the cleanest shirt in the laundry hamper. It is strong only relative to the euro or the yen, which are also dying. Gold and silver do not measure the relative strength of currencies. They measure the absolute debasement of all fiat money. The crash in price is a temporary revaluation of the paper contract, not the metal itself. This distinction is crucial. You own the metal, not the contract. The contract is a promise. The metal is a fact. We must also consider the industrial floor. While the paper traders are running for the exits, the industrial users of silver are quietly going about their business. The solar panel factories in China did not stop production on Tuesday. The AI data centers in Silicon Valley did not stop needing high-efficiency connectors. The demand for physical silver is inelastic. It is not driven by sentiment. It is driven by engineering. The physics of electricity do not change because the price of silver dropped. This creates a floor under the market. There is a price point where the industrial buyers will step in and clear every available ounce. We may be approaching that point. When the price drops below the cost of production, or below the level where recyclers are incentivized to scrap old electronics, supply tightens. And when supply tightens in the face of constant demand, the price must eventually reverse. The smash is self-limiting. It sows the seeds of its own destruction. So, where do we go from here? What is the path forward through this valley of darkness? First, we must accept that volatility is the price of admission. If you want the safety of a savings account, you have to accept the guaranteed loss of purchasing power through inflation. If you want the potential for real wealth preservation and growth with gold and silver, you have to accept the jagged line. You have to accept that there will be days, weeks, even months where the market tries to humiliate you. But realize that this humiliation is the prelude to glory. Every major bull market in history has been punctuated by terrifying corrections. In the 1970s, gold fell 50% in the middle of its bull run before rocketing to $850. Imagine selling at that 50% drop. Imagine the regret. We are in a similar structure today. The bull market is not over. It is just shedding the passengers who don't deserve to be there for the finish line. The accumulation phase often happens in silence. After a violent crash, the market rarely shoots straight back up. It stabilizes, it grinds sideways, it bores people to death. This is the boring zone, and this is where the smart money does its work. They accumulate slowly, quietly, without moving the price. They fill their vaults while the retail investor is licking their wounds and swearing off metals forever. Watch for this pattern in the coming days. Watch for the price to stop making lower lows. Watch for the volume to dry up. That is the sound of the bottom forming. We are also watching a diversification rather than a replacement. The dollar is not going to vanish tomorrow. China knows this. They are not trying to replace the dollar overnight. They are trying to dilute it. They are trying to create alternatives. In a world of alternatives, you need a portfolio that is robust. You cannot be all in on the dollar system, but you cannot ignore its power either. Gold and silver are the bridge. They are the asset that works in both the dollar system and the post-dollar system. They are the universal translator of value. The signal from China is a challenge, yes, but it is also an invitation. It is an invitation to view the world through a different lens. A lens where value is defined by resources, production, and savings, not by financial engineering and debt. The West is addicted to financial engineering. We think we can print prosperity. The East knows that prosperity comes from hard work and hard assets. By holding silver and gold, you are aligning yourself with the reality-based economy. You are betting on physics, not politics. This smash is also a test of your time horizon. If you are investing for next week, you are gambling. If you are investing for the next decade, this is a blip. In 10 years, nobody will remember the price action of Tuesday, February 3rd, 2026. They will only remember whether they held the asset or sold it. They will look back at these prices as a gift, a chance to buy the most undervalued asset on earth at a fire sale price. Think about the contrarian mindset. It is easy to buy when everyone is celebrating. It feels good, it feels safe, but it is rarely profitable. The profitable move is to buy when there is blood in the streets, to buy when you feel sick, to buy when the experts are telling you it's going to zero. That takes courage, that takes a steel spine. But that is what separates the wealthy from the herd. The herd is currently running off a cliff. Don't follow them. Stand your ground. The paper versus physical disconnect will likely widen during this smash. Watch the premiums. If the spot price keeps falling, but the price of silver eagles stays the same or goes up, that is the market screaming the truth at you. It is telling you that the paper price is broken. It is telling you that the physical metal is scarce. Do not let the paper tail wag the physical dog. The dog is the metal. The tail is the futures contract. Eventually, the dog will shake off the tail. We are watching a controlled demolition of the middle class. The inflation eats your wages, the taxes eat your savings, and the market volatility eats your confidence. It is a three-pronged attack designed to leave you dependent on the state. Gold and silver are your declaration of independence. They are your opt-out clause. By holding them, you are saying, I do not consent. You are saying, I will be my own central bank. This declaration comes with a cost. The cost is the volatility. The cost is the sleepless nights when the price is smashed. But the reward is sovereignty. The reward is knowing that no matter what happens to the dollar, no matter what happens to the banks, you have wealth that is yours. Wealth that is private. Wealth that is permanent. The China challenge is just beginning. We are in the early innings of a game that will last for decades. The de-dollarization of the world is a mega trend. It is like a glacier. It moves slowly, but it crushes everything in its path. You cannot stop it. You can only position yourself accordingly. And the position is clear. Out of paper, into metal. So, as you look at the red screen today, take a deep breath. Turn off the monitor. Go for a walk. Remind yourself why you started this journey. You didn't start it to day trade a volatile commodity. You started it to protect your family's future. You started it because you saw the cracks in the system. The crash today is just a bigger crack. It proves you were right about the instability. Why would you sell the insurance now? The system is fighting for its life. It is lashing out. It is trying to scare you. Don't be scared. Be prepared. Be stoic. Be right. The smash continues, yes, but so does the accumulation. So does the deficit. So does the debt. The fundamental forces are irresistible. The price suppression is temporary. The breakout is inevitable. When the dust settles and the weak hands are gone, the market will rise again. It will rise on a foundation of strong hands. Be one of those hands. Hold the line. The storm is fierce, but the ship is built of gold and silver. It will not sink. The narrative is shifting. The world is changing. The dollar is fading. The metal is shining. Do not let a Tuesday morning in February blind you to the reality of the century. You are witnessing history. And history is rarely smooth. It is violent. It is messy. But it bends towards truth. And the truth is gold. The truth is silver. Stay the course. The destination is worth the journey. Let the banks play their games. Let the algorithms do their dance. You are playing a different game. You are playing the game of generational wealth. And in that game, patience is the only strategy that matters. The smash is a gift. Accept it, use it, and then wait. The rebound will come. And when it does, it will be spectacular. China is moving. The world is moving. Are you moving with them, or are you stuck in the dollar trap? The choice is yours. But remember, the exit door is closing, and the price of admission is going up, volatility notwithstanding. This is the moment of maximum danger, but also maximum opportunity. Seize it.